Karvy believes that the Sensex could be heading upwards of 29,000 by this Diwali, which is a good 2,000 point away from current levels. And Varun Goel, head of PMS of Karvy, well, joins us to explain that. Varun, 2,000 point rally in Sensex expected in next 6 weeks, this Diwali. What's the main premise of this conviction?
Well, we believe that going into next month, market will start looking at FY16 earnings. I think as the next quarter's earnings come out, people will have a lot more confidence about the extent of economic recovery, which is really playing out. Our own sense is that economic growth in FY15 will be closer to 6%. I think a lot of people are still anticipating growth somewhere around 5.5%. So that is clearly one. Second factor is that I think a lot of concerns about Fed increasing interest rates in US earlier than expected will probably die down soon, and we will see fresh foreign money coming to good, well-performing equity market like ours. So ours is a call which is based on both expectation of good corporate earnings and good money flows.
Right. So Varun, what stocks do you believe could lead to that kind of up move in the medium term?
Right, so currently the story which is playing out is clearly operating leverage. Let me just explain that. So you have sectors like auto and cement. What is happening there is not just the fact that the volume growth is coming back, because people have a lot more confidence in terms of their salaries, incomes, and the kind of growth that they're expecting. So we are clearly seeing discretionary buying, whether it's four-wheelers or two-wheelers, increasing. Also, we are seeing significant demand, rebound in sectors like cement. So volume growth is going to be high. The second fact is that because of the commodity prices being weak, we believe that most of the companies will see expansion in their EBITDA margins. So if you combine the two, you would see very, very healthy profit growth in these sectors going forward. So I think these are the sectors which one should be really looking to invest in the short to medium term.
The kind of correction that the market has been witnessing, not today of course, has been fairly shallow. I'm talking about the recent ones that we've seen. But of course, today has been a day of a massive rebound. What are you making of this movement that we are seeing in the market?
Well, I think markets, of course, today were reacting to the overnight news about US Fed. I think the announcements there were largely along the expectations that interest rates would increase only by the middle of 2015 and not before that. So I think markets are definitely relieved that there is no untoward announcement. More importantly, I think market has been around in this range for some time, and although 5%, 7% correction can never be ruled out, I don't think there is really a lot of downside to the market, and people are getting more and more confident about the kind of recovery that they will see in India. So we will believe that the markets are going to be pretty resilient around these levels.
Right. Varun, FOMC has maintained the stance on rates, and probably that was the one point which triggered a massive rally in India and overseas. But isn't, in a way, the can been kicked down the road for now, and this issue will come back to haunt emerging markets later?
Well, I think the good thing is that US continues to withdraw its quantitative easing that they have unveiled. So we all know that by October, QE3 was going to come to an end. So incremental liquidity which was being pumped is going to be withdrawn. Now, as far as the first sign of increase in interest rates is concerned, as and when that happens, we don't see that there will be a mad rush out of all risky assets across emerging markets in the world. I think people are going to be selective in terms of how they look at that event. The panic that we saw in 2013, in the second half of 2013, I think was largely unwarranted. Of course, there is going to be pull out of money in some markets where macroeconomic conditions are not very positive. But I think today India stands out clearly as one of the best equity stories across the emerging market space. And as such, the threat to India, of course, is a lot lesser as compared to some of the other countries. But having said that, one really needs to be cautious and monitor the global events very, very closely.
Varun, leave us with some of your large cap and mid cap ideas where you really believe that this operating leverage, which you've been talking about, will be very strong and hence could propel earnings from current levels.
Right, so I think the best example which I can give are four-wheeler companies or passenger car companies. If you look at the last 2 years, the volume growth there has been extremely muted, and we are seeing already in the volume numbers which have come out in last 2 months that suddenly we see car sales have really grown quite well. And the best thing is that there is a strong revival in urban demand. So that is clearly one sector. We can see that in two-wheeler space also. We have seen most of the companies doing well in terms of volume growth, especially on the domestic side. I think cement companies are another example of that. I think some FMCG companies would also begin to see higher volume growth, especially on the consumer discretionary side. So I think all these sectors are good examples of operating leverage.